What do you think about Bill Ackman's take that we could see cuts as soon as Q1? Agree or disagree?
Agree. Frankly, that's kind of the perspective that we've had at Clough Capital now for a little while as we think about the impact of higher interest rates across the economy, specifically the consumer. We're just not sure that the consumer can handle higher rates for a very long time. Obviously, the Fed had a mission to accomplish in terms of getting their grips around inflation. But the growth issues that are starting to emerge in the economy may force the Fed to move sooner rather than later, specifically regard to consumer credit and some of the charge-offs and write-offs and delinquencies that we're seeing in access to credit. And we think that, rates are going to probably have to go down sooner rather than later, probably ahead of market expectations. And that puts us in the Bill Ackman camp this morning.
All right, so you're in the camp with Bill Ackman. How does that shape your broader view of not only equities, but also bonds?
Yeah, good question, Frank. I mean, what we're trying to do at Clough Capital is perform fundamental research, and we're active managers. And right now we find ourselves in a position where we can try to play offense and defense. So despite the concerns about the economy slowing and some of the consumer credit issues that we see emerging, we think there are really interesting areas to be long in the equity markets. So we can find dynamic growth type stories, specifically small cap area, which has done really well in November, but has underperformed greatly for several years now. So we're able to play offense with equities that have been really beaten down in terms of valuations. As we all know, the FANG dynamic or the Magnificent Seven have carried the S&P higher, but there are many areas of the market that look really well valued to us from a long investor's perspective. The way we play offense and defense with a bit of a hedge fund mentality at Clough Capital is to own some defensive stocks as well, things that have high recurring cash flows and revenues, subscription models, big moats on the business. So we can own defensive long positions like gold miners and utilities. And then, of course, I manage a long short strategy, CBLS at Clough Capital, and we have a short book. So that's a wonderful way, we think, to play defense as potentially market prices decline in some areas of the economy.
You're leading me into this. We do want to talk about this ETF, ticker CBLS. To be clear, that is your product. You actually created this ETF. It has both long and short positions. I want to focus on the short positions for a minute. You talked about the consumer just a second ago. Some of those short positions are Target, Best Buy, also Pool Corp. Obviously, these are areas that are very consumer facing. The fact that you want to be short on these positions, what does that tell you, or how should people view your view on the consumer and the consumer's ability to continue spending?
Yeah, Frank. Well, that's really just the overlap of our broader market view that the consumer durable section in particular is under some pressure. Consumers out of COVID had spent a lot of the excess savings that they've had. Now they're grappling with higher interest rates on credit cards, on auto loans, on mortgages, having to repay student loans. So we're looking for those areas of the economy where the consumer might be inclined to take down credit to make purchases. And frankly, they did that in many areas. So if you look at an example like Harley or Pool Corp, so those were areas where consumers spent a lot of money during COVID. And now as they grapple with higher interest rates, we think that those segments of the economy might be under some pressure. Some of the positions that you mentioned there, and by the way, we list all of our holdings on cloughetfs.com, and they're subject to change. But some of those positions do reflect that strain that we see emerging in the consumer landscape and specifically in the credit areas.